If you've noticed gas prices dropping lately, it's not a fluke. Global oil prices have taken a sharp dip. This is because a group of major oil-producing countries decided to pump more oil, flooding the market. When supply jumps and demand stays steady, prices fall, just like when a farmer brings too many apples to market. This decision impacts everyone: families, businesses, and entire economies. Oil prices don't just affect your gas tank, they influence the cost of plastics, airline tickets, and even heating your home. For oil-exporting countries, lower prices mean less revenue. For importers, it's economic relief. The price of oil is a key number watched by governments and investors worldwide. A single decision on oil production can ripple through global markets, affecting budgets everywhere. That's why this recent price drop is making headlines around the world. So, who's behind these big oil decisions? Meet OPEC, the Organization of the Petroleum Exporting Countries. OPEC is a group of nations, mainly in the Middle East, Africa, and South America, that control a huge share of the world's oil reserves. By coordinating how much oil they produce, OPEC can influence global prices. When OPEC's oil ministers meet, markets pay close attention. Their decisions can send prices soaring or tumbling. Sometimes, OPEC teams up with other big producers like Russia, forming OPEC Plus for even more influence. Their main tool? Setting production quotas, limits on how much oil each country can pump. If they want prices up, they cut production. If they want prices down, they pump more. Recently, they chose to increase output, triggering the price drop we're seeing now. These decisions are all about negotiation and balancing the needs of each member. OPEC's choices shape the global energy market and your wallet. Why do oil prices fall when OPEC boosts production? It's basic economics: supply and demand. If supply rises but demand doesn't, prices drop, just like a bakery with too much bread. OPEC's extra oil creates a surplus, so traders expect lower prices and adjust quickly. The fear of shortages fades, and buyers aren't willing to pay as much. If OPEC cut production, the opposite would happen. Prices would spike on fears of scarcity. OPEC's real power is in controlling this supply tap, steering prices up or down. Their announcements trigger instant reactions in global markets. That's how a single decision can change what you pay at the pump. Oil prices touch nearly every part of your daily life. The most obvious impact? Cheaper gasoline. Lower oil prices mean savings at the pump, but it goes further. Almost everything you buy is shipped using fuel made from oil. Lower oil prices reduce transportation costs, helping keep food and goods affordable. Oil is also used to make plastics, fertilizers, and synthetic fabrics, so cheaper oil can slow price increases for everyday products. Airlines benefit too. When jet fuel costs drop, ticket prices can follow. For many, lower oil prices mean more affordable travel and more money left over each month. Businesses save on energy, which can help fight inflation and boost the economy. Whether you're filling your tank or shopping for groceries, oil prices are always in the background. That's why a change in oil production can quickly show up in your budget. OPEC's decision to boost oil output sent shockwaves through global markets. In the US and Europe, stock markets jumped. Lower oil prices mean lower costs for businesses and more spending power for consumers. In China, a major oil importer, markets surged as cheaper energy fueled optimism. For oil-producing countries though, falling prices mean less revenue and tighter budgets. The world splits into oil sellers and oil buyers, each feeling the impact differently. Lower oil prices can help control inflation and stimulate economic growth in importing nations, but for exporters, it's a challenge to balance budgets and fund public services. This single OPEC move shifted wealth from oil producers to consumers worldwide. It's a powerful reminder: energy decisions in one corner of the globe can ripple through economies everywhere.